Yeah,
I
this
better hit record or I'm going to get in trouble here from Matt. Okay, we're recording now.
Hey, Ming, did you go through the, I guess, announcement that CMHC released about how, they're well aware that they've been partially responsible for the fuel and prices, and they want to taper that down, but they don't want to bankrupt young Canadians. But now they might get rid of, 5% down. You have to put down 10%. Oh, homes are great for retirement. It's made lots of people on average 300,000, but that's only because we've let people borrow more to buy it. So it's all just debt created 300,000. And I was like, ah, what a mess of a press release.
Yeah, I saw the headline. I didn't get a chance to read through it, but it's funny because that echoes actually a press release that came out from TD not too long ago talking about, and I'll dive into it during our presentation today, but TD basically said the same messy thing in that, so let me take a step back. Everybody's trying to predict what's going to happen with the housing market, and it's all over the map, obviously. Like, some people are saying, oh, housing prices are going to go up. Some are saying it's going to be catastrophic, right? Nobody knows. Nobody's got a crystal ball. But the TD side, basically, they're saying it's going to go up something like 7 to 8%. Their justification around Toronto housing prices rising that much, and Toronto's not even the worst one. Places like PEI, they're saying, are going to go up double digit, mostly because of almost an overreaction by the government in terms of stimulating the economy and this massive drop in rates. And we haven't seen huge action yet from CMHC, right, in terms of changing some of those requirements around like deposits or amortization or some of those big levers. They could come in and say, bam, no more 30-year amortizations, only 25 or 20-year right? But they're basically saying that there's been a bit of an overreaction so far by the government, and they think it's going to continue, which is why they think that the prices in general across Canada will actually rise. So interesting.
You see that really hitting, like, here's the problem. When they talk about Canada, Toronto, it used to be Toronto and Vancouver, but I'd almost say Toronto in itself is so disconnected from the rest of Canada in terms of, all right, the average price of a house, how the market is, the type of people that buy here. Like, I'm originally from Saskatchewan, right? So $1 million still gets you a beautiful, ginormous house with a
You've seen a normal housing market.
Yeah. Right. But if you look at other parts of the country, right, there's been an argument that a huge amount of the real estate appreciation that's happened all over Canada has mainly been due to ultra low interest rates, not so much economic growth, right? Yep. And when you look at other places in Canada, that's kind of true. There hasn't been any monstrous industry. I mean, if you look at, the last time our dollar was at its peak was kind of, 2012, then it's dropped and held a bit steady since then. But in terms of how popular our dollar was and like how much we were exporting and our demand for our goods, now granted, a lot of that's oil, was really back in 2012. So I'm just wondering if when you look at those stats and stuff, how much do you feel that Toronto's growth is based on just ultra low interest versus actually, job and GDP creation?
I think it's a little bit of both. So, and I think it depends on where in the market we're seeing that. I think ultra low interest rates make more of a difference. I'm going to call it entry level, but it's ridiculous to call it entry level. It's like, kind of the 1.2 sub purchase, right? People who are looking at that monthly payment, because remember, most people are still, end users. 90 to 95% of home transactions for end users. So they care mostly about that monthly payment. So those who are trying to enter the market or trying to get into a house for the first time, or move from condo to house, that is going to be a big influencer for them. But it's an influencer because I don't think that you care about that monthly payment if you don't have stable job, if you don't have all the other kind of fundamentals that we talk about, job growth, GDP growth. You need that as the baseline, right? So I think in the Toronto market, we're still the center of the financial universe in Canada. So I think I think that's still a very important piece. But I think that the low interest rates will be a factor in terms of stimulating the bottom end of the price bracket. When you start to move up into kind of the higher bands, it's not as much about, because they're also that people who are buying in these higher price ranges, they're not doing 80% mortgages either. Most people who are purchasing, $2 million plus homes are putting significantly more down. And that kind of monthly payment isn't as big of a factor for them anymore, right? So I don't know if that kind of answers your question.
Yeah. No, I'm just curious because for me, I feel Toronto has had, a lot of, new companies. I know Google's pulling out of its like Sidewalk Labs, but even without that, they opened up, they rented out that entire building on King Street, right?
Yeah.
Just off Yonge, and a couple other things like that. So there's actually been job growth. It's just when I look at the rest of the country, a lot of it, like, I'm like, wow, resource prices are below where they were years ago and everything. How much of this growth from the average house going from 300,000 to 400,000 has been because, if it's your personal residence, before it used to be 3.5% interest, you've been able to get like close to, I remember in 2014 for my personal, I got like 2.09 fixed, right?
Yeah. Wow.
And yeah, and you could get probably even lower than that. I've seen some people get 2.3 for quite a few of them. And to me, that is, depending on how expensive your house is, easily, $250 to $500 a month, right?
Yep.
So that pushes it quite a bit. And I'm just wondering, in Toronto, it's not, the interest rate does matter a lot because your average house is $1 million, right? So on 800,000, that's quite a bit.
Yeah.
But I feel like at least we have jobs here. So when you see that data, do you feel like, TMHC said, oh, house prices might drop 9 to, I think it's 18%. I just can't see that in Toronto, a 20% drop. I mean, if that happens, it'd be terrible for the short term for what I own, but I could not wait to buy some stuff on 80 cents on the dollar to me.
I'll never say never, but a 20% drop in price would, especially if it's within let's say a year's period, is extremely rare historically in the Toronto market. It hasn't happened since the 80s, late 80s, the last time we had a crash of that magnitude. And the economics that kind of fueled that price crash in the 80s are very different from what we see now. So I think it's highly unlikely. Let's put it that way. And I agree with you. Like, we are actually still seeing job growth here. It's too late for me to edit my slides now, but love to actually show the kind of job growth that we've seen happening in the city. It's still in the positive right now. So that's great. But if we see significant job loss due to COVID over the next, I don't know, year or so, that is a fundamental. Job growth equals, job growth, GDP, and our local economy. If that starts to falter a little bit, all of Canada's in trouble at that point. But I think that is what we would need to see in order to see true impact onto housing prices. There needs to be a reason for people to be, one, not have the funds to pay for these houses, two, for Toronto not to be that option anymore, right? So if we start seeing like emigration from Toronto into other parts of Canada, because I don't know, let's say oil prices pick up. So why would you work here in Toronto anymore when all the money is in Edmonton? If that's the case, then you'll see a shift in our population, and therefore that will become a shift in our prices. But that's, I'm talking about many things having to happen in order for that scenario to play out, where we're actually seeing population decrease in the city. And if COVID, I think, was a localized problem, where it was a Toronto issue, kind of like SARS was a little bit, but if COVID was a Toronto thing, then yeah, I'd be a little worried about long-term Toronto pricing. But because this is a blanket problem, and if anything, you might want to be closer to a major urban center these days if health becomes kind of a deciding factor for people. there's nothing pushing people away from Toronto right now.
What about
Hey,
work from
Matthew,
home?
can I have?
Sure. Faisal, you were going to say something?
No, not me. I think it was somebody else.
Nope.
Oh, hi, this is JD Matthew. I want to ask you about the, you know what, give me a second. Whoa, something wrong with my computer.
No worries.
Let me see. So maybe you can, yeah,
Oh, hey.
okay, something wrong, sorry. So Matthew, first time for me to attend this, I'm very excited.
Oh,
how are you?
welcome. Good, thanks.
Good. So I've been looking at your company website as well. So I want to ask you the like how your view about during like this pandemic, you know, like the difference between the downtown property in Toronto versus the one, let's say, in Mississauga or Etobicoke, of you know, like the potential. And then of course there's like even in terms of like the ability, the type of the ability of tenant to pay. Do you have some you know, like from your view about this one?
Yeah, I mean, well, welcome. Those who are kind of regulars to our meetups have probably heard me talk about this already, but
okay.
But it's okay. Like you know, there's always new folks, and I kind of want to give them our perspective on this. So we have a Volition chat group for all our active clients, and I would say it probably represents anywhere between about, I don't know, 300 maybe 400 doors within Toronto. So amongst those 300 400 renters right now, we have had very little impact, luckily. We were just actually talking about it at the beginning. And while there's been some impact, you know, some people have lost their jobs. For the most part, because we are focused on, you know, tenant profiles, young professionals, people who live and work in the downtown core, generally they're knowledge workers. And they have never been tied to a location to execute their job. They choose to live in Toronto because that's where their friends are. That's when they go into the office, they're close by. But the vast majority of them have been able to pivot pretty easily and work from home. I know that's been the case with all my tenants, and you know, many of the tenants of folks that we work with. You know, we've always talked about targeting that knowledge worker because, you know, back when we were first developing the business case, it was, you know, who were the best tenants, and those tenants were selfishly ourselves, right? We were looking at ourselves and saying that, you know, we were young professionals, we would rather starve and eat instant noodles than miss our rent payments. And that's, you know, how we kind of built this business model around. So in that case, you know, going after those tenant profiles, you know, the places that they tend to want to live is along in the downtown core. And most of our investments have been in the downtown core as a result. The suburbs have, you know, there's nothing wrong with the suburbs. In terms of tenant profile, it's just a little more challenging to get, you know, your young professional renting out in the suburbs. Most people are in their 20s when you ask them where they want to live. You know, somewhere like Richmond Hill or Mississauga, they don't come up in conversation. They talk about neighborhoods in Toronto, and you know, that said, that's kind of, you know, why we have built this business case and around these tenant profiles. Sorry, go ahead. You had something else you want to ask?
No. I like to listen. Yes. Yeah.
Yeah. So, I mean, and in terms of, you know, housing prices and rental resiliency, there's a lot of reasons that we've also gone for these tenant profiles. You know, we're students of Don Campbell, who is the founder of the Real Estate Investment Network, a big real estate investor group. And, you know, when they were kind of in their prime about 10 years ago, maybe, they were very research heavy. And some of that research showed changes you'll see in both rent as well as housing prices as related to public transit. And it was great research because it showed basically that if you're buying within 800 meters to a kilometer from major transit, that while you pay a slight premium, during downturn in the economy, you're able to maintain most of your rent. And it was something like a 5 to 10% change in rent, as well as housing prices, as opposed to like 10 to 15% when you fall outside of that kind of public transit zone. And now that we're actually going through a slowdown, this is exactly what we're seeing. And at the beginning of the call, I was talking with Faisal about it. And he's purchased something out in Hamilton, but I'm sure he's kind of followed the same fundamentals where it's close to public transit. You're getting kind of targeting this young professional demographic. And while it has taken longer for us to rent out properties than a typical hot Toronto market, they're still renting, and the rents are pretty good. We just helped a client rent a property just in the Danforth. We expected $2,000 a month for the one bedroom under a regular market, and it went for $1,950 under COVID. So $50 less a month. So I think that's a very good example of what we're seeing. Still a young professional couple. They're there because it's close to the subway. And yeah, I mean, the rent is pretty close. It did take longer. It probably took us about 3 weeks to rent it out. Usually it's like 3 days. But rental prices haven't dropped as significantly for the kind of properties that we invest in. Hopefully that was.
Sorry, I'm mute. Sorry, I am mute again. Sorry.
Yeah, no,
thank you.
No
thank
problem.
You.
Yeah, no problem. We've got 5 minutes till we get started. Any quick questions then before we get rolling? No.
I'm just one more thing, Matthew. Like,
yeah, sure.
Something like probably, but in terms of somehow buying in downtown versus buying, let's say, in Hamilton or maybe in Burlington, it's just like the cash flow may be a little bit challenging, right?
Cash flow is always tougher in Toronto versus anywhere else, and kind of one of the things that we talk about, quite a bit is to look beyond cash flow. So actually understand the full return of your investment. There's three of us who've been investing for a long time, and when we started in the small towns. Like I was investing in KW, Matt was investing in Hamilton and Edmonton, places like that, and we did it because we were going after cash flow. And as we became more sophisticated investors, we started to understand that cash flow is great. It's often an indicator of risk as well. Because you maybe aren't getting as good tenant profiles. Maybe you're in an area that isn't appreciating as well. So, when you're evaluating a property, cash flow is definitely one of those items, but you want to make sure you're looking at kind of that complete picture. Like, what's the long-term appreciation? What are your tenant profiles like? And it's okay to have a tougher tenant profile, maybe blue-collar workers or whatever happens to be. Just make sure that you're able to handle that. So if you have challenges with your tenants, make sure you have the team to be able to execute against it and go through an eviction process if you need to go through that. Because nothing is for free. We never get more of cash flow or more appreciation even without something else. Like there's always something there. So that's my advice when you're evaluating different places, is just make sure you're looking at the whole picture and not just something like cash flow.
Okay. Thank you, Matt.
I had a quick question again.
Sure.
Have you guys heard from any of the other banks about whether they are letting you use your HELOC, or is that challenging with Scotiabank at the moment?
I haven't heard about other banks. I'm really sad that Scotia is doing this because I have a lot of Scotia mortgages. But I haven't heard about other banks doing this. Now, that said, when Scotia announced it, they also announced, like, along kind of with that announcement was, we're trying to do this as little as possible because they don't really want to inhibit it either. But right now, their risk modeling is basically saying it's too leveraged and too risky. But I haven't heard of other banks kind of stopping people from using the HELOCs for down payments yet.
Yeah.
Do you have a bunch of Scotia mortgages?
No, I only have one, but I'm in the middle of a refinance, and
Okay.
so I wanted to be certain that, so I just wanted to be certain that I could get a lender that I want without them sort of making this an issue.
Yeah. I mean, if you have a good broker, then that should be.
I have a good broker. But
yeah, they should be able to help you kind of navigate a little bit of that. Now's the time you want to have that kind of relationship because it's changing so much. Every time I talk with Hugo pretty often, and every time I talk with him, it's like something new that's changing because so many banks are kind of scrambling as to how they're dealing specifically with COVID. So the one thing I will say before we get started with relation to mortgages and COVID is be very careful before you take a payment deferral. So, I used to be in finance and I used to be very closely tied to credit bureaus. And so I have a pretty intimate knowledge of how credit bureaus work, how credit scores are calculated, and how banks use credit information. Just because it won't affect your credit score. So everybody is swearing that, you asking for a deferral won't impact your credit score. And I am certain it won't because they won't use it as part of a credit score calculation. However, the data is there. And every bank will have not just a credit score that they're basing their credit decisioning on, they will also have all their own internal data, right? They know about you, right? Like maybe you have a credit card with them. Maybe, you have other automatic payments with them. If they have that data and they know that you have a deferral, why would they not put it into their modeling, right? It may not impact your credit score. They may or may not share that information with the credit bureau, depending on how those contracts are written. But if they see a lot of people who have asked for deferrals end up in bankruptcy or having other problems, let's say, somebody that asks for a deferral has a 30% chance of not paying their credit card as well. Oh, now I've established there's a risk with somebody adding deferral. As a bank, as a prudent business, you would take the information that you have and apply it across the board. You may not penalize people for taking a deferral, but you might not want to extend them other credit. You may not want to give them any other mortgages, right? You may place a limit on their line of credit. If they have a zero line of credit, you may close it, right? You want to limit your risk as a bank. So while I think that banks will be true to their word about it not impacting credit score, it does not mean it's not going to impact your credit. And I just want to make sure that, all the folks on the line kind of understand that because there is no free lunch. Like getting a deferral is not it's really meant for those who need it. And, if you need it, take it, but just know that I'm almost certain it will have some sort of impact later on, just based on my previous life in the finance industry.
Hey, man, just to chime in there. So they wouldn't obviously state this in an email, but basically off the record, when we were talking with some people at Scotia and some other banks, they basically said what you said. It's like, look, a ton of people are applying for this, but number one, they will keep track of this, right? So say you're not going to buy any properties for a year or two, maybe 3 years later, it won't be a big deal. But if you have 6 properties, you ask for deferrals on all of them, or say you just got deferrals on a bunch of them, you're not going to be able to buy another one anytime soon, at least from that bank, because they're going to look at this and say, well, 1 month of no rent or 1 month of bad economic activity, and you needed deferrals on everything, right? Why on earth would we lend you more money when we're already basically allowing you to defer paying us, right?
Exactly.
So we were considering it at one point just for the sake of, super boosting cash flow, thinking, oh yeah, add it to the end. That's a great thing. Just stock up this cash and then use that, in fact, almost to maybe like buy another one or have cash on hand to sweeten a deal or do an all cash thing. And our thinking originally was, oh, look, everyone's going to do this. And so if everyone has this, then nobody's really penalized. But if you can avoid doing this, especially if you're planning to buy in the next year or so, avoid doing it. Because if anything else, it'll make you look better that you're able to weather this without needing deferrals.
Yeah, and the relationships that banks have with the credit bureaus is something called a give to get relationship. So in order for me to get a credit score from Equifax or TransUnion, I as a bank must give all the information that I have about my customers. So there is no contracts with the credit bureaus by which they just release information. You must provide information back. They're give to get relationships. So you can almost guarantee that, I don't know if it's across the board, but my understanding of credit bureaus are that if you have information about a client and this client has a deferral and we have it as metadata that we can download from you, I will have that information. And so I'm pretty certain the credit bureaus will also know who's deferred their mortgages. I just can't see it being information that they would not have. It wouldn't explicitly show up, say, as a deferral, but what it may show up as, because credit bureaus banks basically provide almost daily information to the credit bureau, that it would probably just be a line within your payment history showing zero payment. There may not be a penalty or anything associated with it, but it would show a gap in your payment history. It's pretty easy to defer at that point if you have a gap in your payment history, because people, for the most part, don't, unless they are changing their mortgage or for some other reason. But there would be very few reasons to have zero payments for a month or two smack in the middle of your mortgage. So yeah, I don't want to beat a dead horse here, but there's definitely will be repercussions. And I think we don't fully understand what all those will be, but there definitely will be repercussions from deferrals, from mortgage deferrals. Okay, it's 7:05. So let's get into this. Thank you everybody who's joined. I'm going to mute the whole line now, just to make sure that we don't get any noise. How do I do this? Mute all.
Now you're muted, Matthew.
Thanks. And that's oop, shoot.
Okay, that better? Okay, good. People can hear me now. Okay, thanks, Dave. That's our guest speaker jumping in to help us out here. So just to welcome you guys, my name is Ming. I'm logged in under Matt's account because, well, Zoom is locked down basically everything we can do. So I have to log in under Matt's account, that's who we have the Zoom account with. But welcome everybody to today. Let's dive in. So let me share a screen and we can go from there. Okay, great. So who are we? Well, before we dive in that, just thank you to Creeds. This is where we have our physical meetups, and I really miss actually seeing people in person. Zoom is not the same, but we make do with what we can. We want to still say thank you to them. They are still open for business. They are still doing their coffee and dry cleaning, and they've opened up a market there as well. So if you're in the neighborhood, you're looking for some interesting groceries and coffee, please stop by and help support a local business. Who are we exactly? Well, we are real estate investors ourselves, first and foremost. We've been investing for a long time. Myself, I started in 2001 in student rental properties, but now mostly in multifamily and flips in Toronto. And our whole team, we're all investors as well. Yeah, so I think the one thing I would point out here is all our holdings that we've built up over the years are actually ourselves. So we haven't JV'd with other people. We haven't, kind of raised large amounts of capital. This has been all through our own kind of blood, sweat, and tears. Not to say there's anything wrong with JV. I mean, tonight's presentation is all about JV, but I think that's one thing that does make us a little bit different. So Volition Properties, we've got 4 areas of service. Basically, we created the company so that way people could start with us and end with us when it comes to investment property. So we start off with advisory, which is exactly what's happening tonight. These are conversations that we have, teaching, one-on-one coaching about investing in investment properties. We have the realty services, and this is finding a investment property that makes sense. And it sounds a little ridiculous, but this is probably one of the most challenging parts of the business because it is very difficult to find investment properties, especially in such a competitive market like Toronto, that actually makes sense. Active clients that I'm working with right now, it's a bit of a joke. Like I have basically nothing to tell them for weeks on end, and then we find a property that makes sense, and then we have like a day to act on it. We also have renovation and construction services because we know that the majority of advanced investment requires some sort of renovation and construction to execute on. And the last thing we have is management. So once we've got your beautiful luxury rental up and running, we can do the leasing and property management for that as well. We also do normal stuff. So if you have a primary residence, it is a very key tool in your investment portfolio, whether it be a place that you're purchasing and renting out portions of it. And we have clients who do a lot of clients who do that. Or it's just a home for you to live, but we want to make sure that's set up properly because, you want to maybe get a HELOC on it, or you're in an area that is going through appreciation. It's still going to be a big asset in your portfolio. And, we put this up every month, but this is what we really aspire to be. While a lot of, when we started, it was like this. It was a maze. And I wish I had some sort of mentor or guide or group or community to guide me through the investing process. And when we created Volition, a big part of it was making sure that we created community as well. Because, even now in our investment journey, it's still a maze. There's still a lot of problems that we have to solve along the way, and we still need community. So anyway, we aspire to be that eraser in your life. Next thing on here is our private chat group that we have. This is for all our active clients. If there's anybody on the call who's an active client right now and I've missed you, please reach out to me and I'll make sure that you're added on. Yay to us. We hit over 2,000 members. I think it was just a week or two ago. So welcome to all the new folks who are on the call. And lastly, in the intro is our advisory. So if investing is something new to you or investing in Toronto is something that you're interested in doing, we do offer a 60-minute complimentary advisory session. Basically what we do is, let me back up a little bit. A lot of times, I get asked questions like, oh, where's the best place to invest, or what should I buy? And, if people are asking me that, or people are providing them answers to that, really because they don't know their individual investor situation. There is no best property. It really depends on what your goals are. And this is what we try to accomplish during this advisory session, is really understand where you're coming from where you're trying to get to, and then we'll put ourselves in your shoes and talk about what the next steps are and build out a plan on how to get to your goals. So if you're interested, send us an email at the end of the session or during the session today, and you can reach us at info@volitionprop.com. Okay, so my market minute. This used to be really boring because nobody used to care about what's happening with the market, but COVID has made me a lot more interesting. Everybody's a lot more interested in what's happening with the market now. So let's go through the public TREB data, basically what is being put out by the Toronto Real Estate Board. Then we'll go through our Volition data, which is actually a lot more granular. And then, we're going to dive into what we're actually seeing on the street, because TREB data is lagging. Like April's the latest information that we have. That's already 2 weeks old. Our data is a little more up to date than that. It's maybe got about a 1 week lag. And then there's what's actually happening now, because it is such a dynamic market. So I think it will be interesting for you to hear. So should be no surprise to anybody who's paying any attention to real estate right now that sales volumes are way down, and they're way down. And this is primarily due to social distancing and showing and selling restrictions. I was saying at the beginning of the call today that it's been one of our busiest months, but it is very challenging right now to see a property. We basically have to be, donning hazmat suits and masks and stuff like this. We have to sign forms that we haven't been showing any symptoms. We have, restricted number of people entering the property at any given time. So it's a whole new world. And for many people, as I was saying, 90 to 95% of transactions are for people who are having these as end user homes. Investors are a little bit different, but if you're an end user, you're just going to wait a little bit, right? There's no rush really to go buy right now unless you're trying to snag a deal, quote unquote. But most people are waiting. And so this is exactly what we're seeing in terms of sales volume. Now, sales volume is not to be confused with pricing, and we'll get into that as well. One thing I want to call here is new listings as well. So new listings is, exactly what it says, new listings to the market, and this is also way down. This is, some of the, I think the number was, we haven't seen it this low in about 20, 25 years. So people aren't putting things on the market either. And I usually don't show this graph, but this is actually the ratio of sales to new listings. The reason I want to show it is because it's almost a bit of an indicator of I call it the speed of the market. So going into this year, January, February, we were getting a lot more sales than we were having new listings. And this is an indicator that inventory is tightening, right? More sales, so more demand and less supply, right? Basic math there. And if we keep trending with more sales, a higher sales to listing ratio, the market keeps getting tighter, and that's when we start seeing prices accelerate. I wanted to show April because what has happened is with sales coming down, we're also seeing inventory come way down. And the ratio of sales to new listings is not off. We're actually pretty much in line historically with an April, which is why average home prices haven't changed that much either. If you look here, year over year, we're pretty much the same. There has been a decrease from March, but in terms of our kind of seasonality of prices we'd see through in April, we're pretty much on par. And when we start to dive into these sale prices a little bit deeper, you'll see what I mean. So Volition market data. So for those of you who are new, data, you can hide lies behind data, right? So it's always diving deep into the data so we can get a better understanding of it. TREB data is useful, but it again is an average of what's happening throughout the GTA. And we all know that there is an average doesn't really tell you anything. It doesn't tell you how much activity is happening at the bottom end or the top end of the market. It doesn't tell me what's happening in Scarborough versus what's happening in Danforth. So let's actually look at that data. And so that's what we do. We look at the downtown core. And the downtown core, exists of these particular neighborhoods. The W01s, W2s, CO1s, CO2s. These are the TREB, the Toronto Real Estate Board codes for these neighborhoods, by the way. But what we do is we look at these individual neighborhoods and we track individual property types using the home price index. So, for example, 3-bedroom homes, detached, how much did they sell for? 2-bedroom condos, how much did they sell for? And it changes. We track the like-for-like properties, as opposed to just looking at average, because an average is going to be influenced by, cheap home sales, and it's going to be influenced by expensive home sales. So looking at this data, and we've been tracking this since the beginning of January in 2017, we continue to see an upward trend even through COVID. So if you look at the very end there, into March and April, you'll see there's still a bit of a trend up. What I expect to see as April rolls into May is a flattening. There is a chime there, so I'll repeat that. What I expect to see is a flattening of the market. I don't expect to see a major decrease. There may be a slight blip down, but in general, I don't expect to see a big fall. And Sam, Ed, and myself will get into that a little later. But this is the data as it shows. We're not seeing a big fallout of April prices. Now, when we look at everywhere else, what are we seeing kind of outside of the core regions? So these are your Vaughns, Richmond Hills, your Willowdales, stuff like this. Again, we saw the big dip in prices in 2017, but as we get into March and April, home prices haven't taken that much of a hit. Now, sales volumes are way down. This can mean that we don't have as much data to reflect in changes, but it hasn't been like 1 or 2 transactions. We're not getting that low. So this is still a good number for us to reference. And home prices are not skyrocketing, they're not falling, they're remaining relatively flat right now. We are seeing a little bit of a tick in condos between March and April. You can see it's still trended up for a lot of them, but like CO1, which is kind of our downtown core area, has seen a little change. What I do expect to see in terms of home pricing impacts, when we see the May data, will be condos probably taking the brunt of any sort of pricing changes. So, sorry, before I jump into that, I wanted to talk with Ed and Sam about what they're seeing in the market itself. Do we got both of you guys on the line? Are you guys on mute?
Yeah, we're on mute. Sorry, just give me a second. I'm just at home right now.
Yeah, no worries. Sam, you on the line too?
Yeah, sorry. Let me put a shirt on so I can go on video.
So basically, I kind of want to walk you guys through, from trailing data to a little more recently trailing data to like what's happening at this moment. So Ed, what are you seeing right now in terms of home sale prices? Are you seeing big changes in the home sale prices? How does that look these days?
Do you guys hear me?
Yep, you can hear you loud and clear.
Okay, excellent. So I'm also part of Volition too. It's Ming, Sam, Matt, and I, and we've all been pretty active in the past few. I would say at least in the past few weeks, things have been really picking up. It seems like just today, especially with the nice weather, people are a lot more willing to go outside, especially for vacant properties. What we're seeing, at least in the downtown market, and even the uptown markets, like properties that are below $1 million sell very quickly. Still multiple bids. I went to see a property last week through 8 bids on a small property, small house, sold for around 1.1 million. It was listed for 900,000. I think there was 9 bids in total. So a lot of multiple offers on smaller properties still. I think anything below 1.5 million sells quite well in downtown, as long as it's reasonably priced for what it is. Anything above that, once it gets closer to 2 million, depending on if it's a multifamily or not, it does have a harder time to sell. I'm having trouble selling a few multi-million-dollar properties right now in the uptown market, for example. But I think downtown, kind of like what Ming and what I was suggesting, is that it's very resilient to market change. At the end of the day, the fundamentals have not really changed. Sure, there has been a hit to some of the markets, for example, like the Airbnb condos or the rental markets, because people are moving back home. But with houses, and also like how Vinay was saying too, but as for houses, with all these government, basically not incentives, sorry, the government funding and the government cash injections, people don't have to sell. They can do a mortgage deferral if they really need to. Even if the tenants do move out and they cannot get their rent payments, they can apply for a mortgage deferral. And for properties like, no one wants to sell at a loss. And if the government keeps going on with these cash injections, I don't think people will need to sell at a loss. So that's why we're seeing that prices are maintaining relatively stable. There might have been maybe like a 5% drop in a few condo sales. You might get it really, really lucky and get a good deal, maybe like a 10%, 15% drop if you're super lucky. But I haven't really seen it except for this one condo that was on the market for less than 24 hours. I think it was on the market for like around 12 hours. I was thinking about checking it out myself, maybe even buying it for myself, but the next day it was sold. But I would say downtown market for condos or real estate or houses has not really dropped in prices. Are we seeing crazy bids on every property? No. But I think everything is still moving quite well for the amount of showings we're getting. Especially with COVID, things are a lot more difficult to do showings. You have to sign a disclosure. You have to make sure the tenants or the owners allow you to come in. And I personally myself, like for like a large part of COVID, I just refused to do any like on-site showings because it was a little bit too dangerous for myself, the owners, and for any potential buyers. Like it was virtual tours, right? So, but that being said, I think the rental market took a big hit this year. The rental market, Ming was saying that he was able to get a few with a $50 discount. That's phenomenal. That was excellent work for whoever was marketing that property. But I'm seeing that because of the pandemic, Airbnb condos are being listed for a fraction of the price, and there's influx of units, and a lot of people decide to move back home. So with that, people had to take either rent cut, or they just don't have a tenant. It's very hard to rent out during this time. But will this last? Probably not. We're expecting a lot of re-employment in the next couple of months as Ontario slowly reopens, and Toronto being Toronto downtown still being the fundamentals of having all the jobs here. Will it fully recover within a year? It's hard to say, but a lot of studies are showing that it should be recovering within the year or two. Within a year or two. But I mean, it's an opportunity for people to get in the market where they thought they weren't able to before due to bidding wars, making properties be worth going for $100,000, $200,000 over asking or even more, right?
Yeah, I just want to. I'm seeing the exact same thing as you, Ed. I think that's good to hear that we're kind of going through the same thing. The rental, I should caveat, the place that we got rented for just $50 less than what we anticipated is a triplex. So it's kind of out of the downtown core, not out of the downtown core, but not with all those condos. Because I know that's where I'm seeing it and where you're seeing it. The places that have really been hit in terms of rental prices are the condos, especially those that had friendly Airbnb policy. Because once the short-term rentals stopped, there was a flood of properties on the market. on both the rental side and the sales side in some of these condos. And I know, Ed, you live right in that downtown core. You've probably seen it, better than I have. That just change of availability of rental properties in those buildings.
Well, yeah, I think people have to think of it like this. Like, if you're buying a pre-construction condo, you're not always able to rent out your units right away, and for the same cost as maybe a condo that is a few blocks away from yours. It's because there's an influx of units onto the market, and it's going to take time to adjust. The people who are more desperate to rent out the units will rent it out for a cheaper price, while people who are willing to hold and rent out for a more expensive price. But obviously, the fundamentals here change a little bit due to COVID causing unemployment, or much more unemployment than Toronto's used to. Like we see it on all the streets, right? All the stores are closed, few are boarded up. Will this change? Yes. How long will this things take to get back to normal? It's hard to say. But I mean, if Asia is an indicator in any way, I mean, it took them 3-4 months to open basically all the borders. They had a small second wave of COVID, which disappeared quite quickly too. And Wuhan, I mean, it's obviously we're not Asia. We don't have that tight control. Not everyone's wearing masks when they go outside, right? But at the same time, will this last for another 2 years? I don't think so. Like, I think, end of the day, Toronto is a big city. It's like you guys can use this as an opportunity to get into the market or buy more into the market, or you can just wait it out. And once like there is a vaccine, or once this becomes as normal as a seasonal flu or whatever it may be, we're going to see regular growth in Toronto again. Hopefully not the 5-10% a year. Just I really hope that's not the case, because that's a headache for everyone. But,
Sam, is there anything you wanted to add on? And I don't know if you've seen anything different or anything you want to add onto what Ed's been talking about.
Actually, Ming, I want to chime in for one more thing. Is I think I noticed that because I do some suburb properties right now too. There seems to be a drop in the suburb prices between like anything above 1.5 is really impacted the suburbs a lot more than downtown. Those things just don't move. Not many showings at all. Anything over, I think, 3 million still moves regular. I saw, like, we were looking at a $4 million house the other day, or 3,999, so for 4.5 million, like, instead of 4, because that market doesn't really get affected by COVID much.
The ultra luxury market is kind of its own little thing. And I can totally echo your sentiments. Me and my wife kind of live out in the country, and we're looking at potentially buying a place out here, a different place out here, and we're kind of in that 1.5 price range. And the houses we're looking at, it was already slow to begin with out in the country, but like most of these houses have been on the market for like 2 or 3 months, and we're the only people coming through to see the place that week, right? It's just really slow right now.
Yeah.
Cool. And the last thing I'd want to end with there. Thanks a ton, Ed, for your input on this. Ed, for those of you who are new, Ed is he's very active in the market, and he helps a lot of our buyers on here. A lot of people who are on the line have worked directly with Ed. But there is a little more risk now as a buyer, right? There is uncertainty, like in terms of what's happening with the market. It could go up, it could go down, it could maintain. We don't know, and we don't know for how long. But because there's that risk, that's why it's a buyer's market. If everything is certain, then there is no more risk for the buyer, and it goes back to your traditional Toronto seller's market. So,
Ming, sorry, I just want to add one more thing. I just thought about it when I say there's risk. I think you're right. There's risk. I think there's short-term risk, because there's short-term risk where you're not going to be able to cash flow, because you might not be able to rent out the property as fast as you were before, or even for as much. But I think long-term, as long as you can hold past this this pandemic, it should be fantastic. We should see normal growth unless there's another wave of something that hits. I think we're the biggest market risk right now, in my opinion, are commercial spaces and office spaces in particular.
Yeah.
And I have a few clients looking for restaurant spaces. We're looking for leases of a few $100,000 a year previously. 1,500 square feet for $100 a square feet in the downtown core. But what we're seeing is that I had two clients. Actually, one client just pulled out from wanting a piece of the path. Why?
Yeah.
Why is that? A lot of these big corporations are moving their employees from the offices to home offices. So a lot of these millennials are now working from home, and they probably won't go back to the office for the next year or so, or maybe even forever. Like, we don't know, right? Yep. So we see a lot of corporations, like, they still need the mind real estate of new employees, but they might not need actual office real estate. And that is where there might be a longer period of recovery. Houses is a necessity for people. People still need a place to live. But these office spaces in downtown, it might take a little bit longer to recover. That's just my opinion.
Yeah, I agree. I would be very cautious if you're looking, especially at office space in downtown Toronto. And it's really interesting because office space vacancy in Toronto was the lowest in all of North America just a couple of months ago. And, we'll see what happens, I think, over the next couple of months. But it will be I would be very cautious, like you said, if you're going into that space right now. Just one last thing that has come up, reminded me that people have been asking is, do we think there is a fundamental shift away from urban areas to suburban or rural areas as a result of COVID? Some people are saying that, because you can work from home now, maybe people won't want to live in a major urban center like Toronto or New York or whatever happens to be, and that people will fundamentally want to live in rural areas. I don't think that it is impossible. I think that there will be some people who this makes them shift their entire way they work, and they can be alone in the countryside. But I think few people have actually experienced and understand what it's like to live in the countryside. And it's a little romanticized. I actually live in the country, so I know what it's like. Millennials rely on the internet. You can't easily get the internet when you're out in the countryside. And I have to rely on wireless networks. I'm on some systems. I have, we have well water out here. I have to make sure that our water is tested. I don't think people, especially people who love convenience, who pay for Uber Eats, understand what it's like to live away from civilization. And I think that a lot of people are thinking about it, perhaps even romanticizing it right now. But I think the fundamentals of what make people live in the city remain. And it would have to be a huge cultural shift where people don't value convenience anymore, or value it a lot less to move away from the city. I'm not saying it's impossible, but it would be a very big change in kind of the culture of, in culture in general, right, where people pay for convenience.
Yeah, I would like to add also to that too, where I would like to think I'm a millennial. I'm pretty sure I am. I work from home every single day. I'm sure a lot of my business is downtown. And I do travel to St. Markham and York region quite a lot too, because I have a lot of business there. But I see downtown, I see the traffic going up and down downtown Toronto. There's no way I want to do that every single day, even if there's an off chance I have to come down here. And secondly, I don't need to be here for work, but I choose to live downtown because, again, the convenience. It's like when all your friends are here, when there's a community, you can walk around everywhere. I live right by the lake. It's like I always say to myself, until I have a family, I don't really want to live in the suburbs. I don't need that space. I don't. It's it's not because of work for myself. Obviously, for others it might be, but I think for a large population, they want to live downtown for the convenience, either for work or for going to restaurants, bars, and whatever else it may be. I don't think office spaces are going to disappear at all in any way. I think they're still the root for many businesses, but I think for a lot of smaller corporations with like maybe a couple of offices here and there, they might start working a little bit more remotely. But I doubt everyone's going to go full blown Zoom meetings every single week. I don't think that's very effective.
Yeah, I agree. Even for meetups like this, a Zoom meeting is it's just not the same. I can't wait till it's normal and I can actually see people again. Cool. Thanks so much, Ed. Just wanted to go back and touch quickly on, so these are our opinions. What are some other professionals saying? And if I was to sum it up quickly, nobody knows. And even the best talking heads out there have conflicting opinions. So I pulled this from TD, and then I have this from DBRS Morningstar, which is a credits agency. They have completely differing opinions on what's happening with the Toronto market. As I was mentioning before we kind of started the formal presentation, TD believes that the government is going above and beyond what they need to do in terms of stimulus and handholding, and as a result, we'll see growth happening within not only the Toronto market, but you can see a bunch of other markets that they've called out there. Conversely, you see DBRS Morningstar saying the opposite, and that in the next 3 years, we're going to see a 14% price drop. Does any of this actually matter? And it's a bit of a rhetorical question. If you've been if you followed this for a while, you'll know what the answer is. And the answer is no. It doesn't actually matter what's going to happen with the prices over this short period of time. And short period being 3 years, like it doesn't matter. What matters more is that you have a property that you're renting out, that you're getting good tenants, that you're getting cash flow on. So you can hold through whatever down period that is, be it 6 months, be it a year, be it 3 years, we don't know. That is going to appreciate over the long term. So in 10 years, in 15 years, you can look back at that $100 million property, and it's going to be $3 million, right? That's what we're looking for when we're real estate investing. Long term, boring, but boring because it rents out consistently, consistent tenant profiles. That's what we're looking for. All these fluctuations that are happening now in the short term, they're nice to talk about, honestly, but it really doesn't make a difference when it comes to our long-term investment strategy. We came up with a COVID action plan 2 months ago, 2 meetups ago. If you want to know what we're doing personally and what we've been advising our clients to do to react to COVID, check out our website. It does have that meetup on there. And it was a full 2 hours of us going through in detail everything that we're doing to manage the pandemic. And that's it for our little blurb. But I know you guys are all on here online to come listen to Dave speak. Let me make sure that his line is unmuted here.
I'm here.
Oh, you're there. Okay, awesome. So let me introduce Dave. Dave is a real estate entrepreneur. He's an author. He's a podcast host and has a fantastic course which he helps people understand how to raise money. And he's offered up a wonderful customization to this for Volition folks today. How to do this? How do you possibly get people interested in investing or get their capital during a pandemic. It's probably the last thing on a lot of people's minds. And Dave, in his wisdom, has kind of tweaked what he's talking about to speak specifically to the COVID pandemic. He's been a very long time investor as well. And if you are a fan of podcasts, you got to check out the Property Profits podcast. It's an excellent resource for investors. You can just Google Property Profits podcast, and it's available on everything, iTunes, Stitcher, whatever you happen to listen to. And he takes exactly 17 minutes and interviews a variety of investors across the country. And I think I was interviewed by Dave, and I think my show is coming up sometime soon. We'll see.
Yes, very soon. Yep, for sure.
Awesome. So Dave, do you want me to let you take control of the sharing? And
Yeah, that'd be good. Ming, is it possible for you to make me a co-host? I think that just makes things easier for sharing the screen and whatnot.
I will figure that out.
I think you just right-click on my thing there, and then the three little dots. You can make me a co-host. I think if you're a host on here. Otherwise, Matthew might have to do it. I'm not sure.
I am in Matthew's account, and my Zoom skills are low.
We're all getting better at this thing, I tell you. Yeah.
So I will try to do that while you share your screen, and hopefully that works.
There you go. Let me make sure we got all systems go. You guys, give me a thumbs up if you can see my screen all right. Thumbs up?
Yep, I can see your screen perfectly.
All right, perfect. And just let me get things organized at my side. So first of all, Ming, thank you very much for that wonderful introduction. And hats off to you and the gang for everything that you do for Toronto area real estate investors. It was a lot of fun, me kind of listening in on your meetings, and I really appreciate your take on the market and your experience with that. Fantastic stuff. So again, welcome everybody. My name is Dave Dubeau. Our presentation tonight is finding investors and raising capital in these weird, strange COVID crisis times. So again, big thank you to Ming and to Matthew and Ed and Sam and everybody that's part of Volition Properties. Really appreciate you guys allowing me to present to your group. And let me just get an idea here. I'm going to expand the screen a little bit so I can see everybody better. Who likes free stuff? And you guys, I'm looking right back at you. So if you like free stuff, give me a thumbs up. And thanks to everybody who's on via video. That's a lot more fun. If you like free stuff, that's great. So here's what I've got for you for being on the call live. I got 3 free things for you. The first thing is a copy of the slide deck from tonight's presentation. Now that's important because I'm going to be running through about 170 slides in about 60 minutes. So it's going to be going very, very quickly. I do encourage you to take some notes, but I don't want you to stress out too much about it. I'd rather have you focus on the message, not so much on jotting down notes. All right, so that's the first bonus. Second bonus is a copy of my newest book, Money Partner Formula, PDF style. That'll be getting sent to you as well. And a special report that I put together, the top 7 ways to generate immediate credibility. And this is really important, you guys, because in order for somebody to joint venture with you, to invest with you, to work with you, they need to know you, like you, and trust you. So I'm going to show you definitely how to solve the first 2 challenges here tonight. And this will help you solve the third challenge, how to get them to trust you. All right. So those are free gifts. And that's just for people who are watching this live. And I'll show you how to get those at the end of the conversation tonight. What I'm going to suggest, you guys, I'm going to be going through a lot of stuff very, very quickly. Save your questions until the end, and I will, either we'll be covering them during the rest of the presentation, or I'm happy to stick around as long as you want at the end of the presentation to answer questions. All right. So let's jump in. Why is it that some people are so successful at real estate investing while the majority are not? And I'm sure everybody here has heard of the Pareto principle, the 80-20 rule. And that applies to real estate investing as well. I'm sure when you guys attend the live Volition events, you probably see where some people are rocking and rolling with their real estate investing and other people are kind of stalled out or stagnant, right? And a friend of mine, Peter Kinch, years ago, shared with me that it's definitely the 80-20 rule when it comes to real estate investing, that approximately 20% of active real estate investors own 80% of the properties, and the bottom 20% or the bottom 80% of real estate investors are scrambling for the other 20%. So how do we get from the bottom 80% up into the top 20%? I want to share that with you here today. And I love this saying by Stephen Covey. I definitely believe this is more true now than ever. And that is, I'm not a product of my circumstances. I'm a product of my decisions. And this is really, really true in times like these, in times of crisis, in times of opportunity, right? Because I think this is going to be an amazing time to get your ducks in a line to take advantage of some of those opportunities that are going to be coming up that Ming and that Ed were talking about. You know, it's no longer as crazy of a seller's market right now as it was in the past. I think that's going to continue for a little while where there's going to be opportunities coming up, all right? And it's our job to be ready for them. So I've seen over the decade and a half that I've been doing this stuff, teaching and training people, I've seen people go from nothing to becoming very, very successful in real estate in spite of what other people use as excuses or as reasons why they can't. So I've seen people who are a little bit long of tooth, or in other words, a little bit old, getting into real estate and becoming successful even into their 70s. The youngest one I've seen personally is a kid age 15 who has bought his first fiveplex, not using any of his parents' money. Right? So age doesn't have to get in your way. Male, female, or otherwise, especially nowadays, no reason why anybody can't get into this. In fact, personal experience, my own mother, back when I was a kid, and we're talking about the 1970s, 1980s, back in those days, as a single working mom, she built up a portfolio of over 50 doors back in the day before there were gurus, before there were real estate clubs, before there was training. So again, doesn't have to stop anybody. The color of your skin, where you're from, the original language you speak, none of that needs to get in the way. There are people, and you've seen people who've come from nothing and just created amazing things. I'm going to show you that it doesn't really matter how much money you currently have or do not have, or even what your current credit situation is. People have overcome those challenges and become very successful. Contacts, previous experience, etc. And people are becoming successful in real estate even in spite of economic uncertainty and pandemics, right? And it doesn't matter what kind of real estate investing you choose to focus on. I've seen people become very successful with buy and hold of single family homes or condominiums or duplexed properties, you know, following the BRRRR strategy or doing buy, fix, and sells, lease options, rent-own deals, commercial, residential. Normal commercial, like they were talking about, that might be a little dicey for a little while, but commercial, residential, definitely. Development deals, tax liens, tax deeds, Canadians going down to the States doing that stuff, you name it, people have become successful at it sooner rather than later. So what is this golden key to success? Well, it's very simple. It's being able to access the capital and the resources you need to do the deals when they make themselves available. It's being able to raise capital for your deals. And you guys, now is the perfect time to lay the groundwork. Now, I won't pretend to know Chinese, but I've been told by people supposedly who know this stuff that the Chinese character for crisis is made up of two characters. One represents danger, the other represents opportunity. So that's definitely in the time we're in right now. It's dangerous, obviously, we all know the danger, but that's also going to create opportunity when we're ready for it. And I'm going to suggest that probably if you're on this call, you probably agree with me on this, and that is that real estate is a much better option for most people than pretty much any other investment out there. I mean, think about it. If you brought an investor partner on board with you in a good, solid real estate deal, that is so much better than them investing their money in the stock market. We saw what happened with the stock market just recently. And I wasn't aware of this, but I've heard that back in, I think it was 1987, they created a breaker switch for the stock market. So if it dipped down a certain amount and a certain period of time, the breaker switch would go off and would turn off the market for 15 minutes to let everybody kind of cool down and cool their heads off and get back into it. Well, between 1987 and 2000 and 2020, that breaker switch flipped off one time. I think it was around the Bear Stearns thing. But in the month of March alone of this year, it flipped off 3 times. I believe that was either in a 48 or 72 hour time frame. It only went off once in 30 some years, went off 3 times within a couple of days because of this whole COVID thing. That just shows me how volatile the stock market is. That just shows me another reason why real estate is so much better. And you guys, while everybody else is hunkered down, vegging out, freaking out, relying on the government for handouts, etc., now is the time for us to take action. So we want to take a look and see what everybody else out there is doing, which is nothing. And we want to do the exact opposite. That's what my mentors, Dan Kennedy, originally said. Take a look at what everyone else in your industry is doing, then do the complete opposite. Chances are you'll be very, very successful. Warren Buffett, be fearful when others are greedy and greedy when others are fearful. People are fearful right now, you guys. This is a time for us to be greedy. And I don't mean greedy in the sense of steal houses from little old lady. I mean, be greedy in the sense of be ready for the opportunities when they arise. Now is the time for you to take a role of leadership within what I call your sphere of influence. And we'll dive into that much more in depth in a few minutes, all right? Now is the time for you to be the shining example of a positive influence. I don't mean go be Pollyanna and just the sky's always going to be sunny type person. Be realistic, but be a positive influence. Show people what the opportunities are that are coming out of this situation, right? And right now is the perfect time to get our ducks in the line, get investors lined up, ready to go when those deals come down the pipeline. This is the perfect time to do that. Now, you folks, if you aren't already awash in investor money and awash in capital for your deals, I think I might know what is holding you back, because it's the same thing that held me back for a long time. And it's the fear of picking up this thing and doing that dreaded dialing for dollars, because we've all heard that. We've all seen movies about that. We've all seen Wall Street, Wolf of Wall Street, etc., where they're cranking stuff out on the phone, sleazy, slimy kind of sales techniques, etc. So a lot of us are freaked out about that. We don't want to do that. We don't want to come across like we're desperate and we're begging for money, like we've got our hat in our hand. We're worried about that, and that stops a lot of people in their tracks before they even get started. So what I want to do is I want to show you something different tonight. I want to kind of turn this whole thing around, and instead of us chasing after people, instead of us running after capital and running after investors, why don't we get logical? Why don't we apply marketing? And instead of us chasing after them, let's get them calling us up on the phone. Let's get them sending us emails or text messages or instant messages, reaching out to us, wanting to know more about what we're up to with real estate investing. I'll tell you something, that conversation is completely different compared to you chasing after people. All right. So you guys, I'm going to give you a little dose of tough love right now. And this is a dangerous thing to say with a real estate group, but I'm going to say it anyhow. And here is the truth. The truth of the matter is nobody really loves real estate for real estate's sake. All right, there, I said it, you guys. I know we're all real estate weirdos. We all really enjoy real estate, but bottom line, if you had the choice between dealing with tenants and toilets and doing property inspections and doing all the hassles of property management and tenant management and all that kind of stuff, and sitting on the beach and having one Lotto Max and having like $88 million in your account, which would you choose? Chances are you would choose the Lotto Max, all right? So nobody really loves real estate for real estate's sake. I mean, what are we talking about? We're talking about bricks and sticks and mortar and tenants and toilets and all that kind of stuff. But what we do know is that the chances of us winning Lotto Max are next to nil. And the other thing we know is that real estate is the ideal vehicle for us to create wealth. It's the ideal vehicle for us to create our ideal income through cash flow. It's our ideal vehicle for us to create, at the end of the day, our ideal lifestyle, right? We understand that that is what we're into real estate for, all right? So I'm going to go through this presentation using the analogy of real estate as our vehicle. And what does every vehicle need? It needs a driver, and our driver is you. Your real estate vehicle driver is you. What else does a vehicle need? It needs fuel. And when it comes to real estate, money is the fuel that makes everything go around. All right. Now, when it comes to financing your real estate deals, when it comes to coming up with the money for your real estate deals, you've got a couple of choices. You can self-finance like many people do. And that's kind of like having a little jerry can of gas in the garage. You put that in the car and off you go. And that might be good to get you started. But sooner or later, what's going to happen? Sooner or later, you're going to run out of gas, right? And that's where you get stalled out. And that's why, again, my friend Peter Kinch was telling me that the vast majority of Canadian real estate investors get stuck with 1, 2, maybe 3 properties in their portfolio because they ran out of gas. They ran out of capital to buy more property. So what I want to do is I want to show you how to create your very own gas station. And that's by having investors in the wings ready to go. When you've got your very own investor gas station, you can pull up anytime you want, 24/7, fill up and go shopping for properties. All right. So if you guys want to write one thing down, when it comes to real estate, which comes first, the money or the deal? I suggest the money always comes first. All right. A little bit about my background. I'm a Canadian. I'm from British Columbia. I'm on the west coast of Canada. So a lot of fun listening in on what's going on in the Toronto market. I'm based in the interior of British Columbia, but I lived overseas for a long time. So I actually, out of university, went and traveled around Mexico and Central America, settled down in San Jose, Costa Rica, and without a single clue, I started my own business down there. And through hook and crook, a little bit of luck as well, became quite successful down there. Got married, had a couple of kids, family, the whole bit. And then things were going really, really well. And in 2003, my then wife and myself decided, let's pack it all up, move back to Canada, and start all over again from scratch. And people always say, Dave, we're living in tropical paradise, Costa Rica, where most Canadians would love to retire. Why the heck would you leave that and move back to Canada? And the truth of the matter is, yeah, Costa Rica is awesome. Love it. But there are certain things. So when you're a pasty-faced white guy like me, whether you've got money or not, people always assume that you do. So you're a bit of a target, and so is your family. So there is a risk of things like kidnapping, which there isn't a big risk of in Kamloops, British Columbia, where I live right now. All right. So part of that was the whole thing. We wanted more security for ourselves and our children. Plus, Canada is just a really, really great country. You don't realize that until we've been away from it for a while. So we wanted our kids to grow up in Canada. So we did. We moved back to Canada, moved to Kamloops, which I had no experience in, primarily because of the climate. It's fairly warm here. And I had to start all over again from scratch. I wasn't able to sell my business in Costa Rica, so I didn't have a heck of a lot of money. And I was busy trying to figure out what to do when I saw one of those late night infomercials. So this is way back in 2003. So one of these late night infomercials, how to get into real estate with little or no money. And I said, that's perfect, because that's exactly what I have. So I sent away for this American course, got it. It was a whole bunch of binders and CDs and all this kind of stuff. Had to Canadianize it, and I put it into play, and very, very quickly did 18 deals in 18 months in the small town of Kamloops, which at that time was about 80,000 people. All right. Cool thing about that was all through marketing. That was not using the MLS, not using realtors. Not that there's anything wrong with it. It's just that I did all of this by finding and attracting motivated sellers to me. All right. That was great. I got a little bit of a reputation about being good at marketing, met up with a kind of a Canadian real estate guru at the time, and worked for several years helping him grow his company through marketing. And that's why I really developed my passion for public speaking, training, teaching people. I co-authored a few books with some very, very smart people. And that's when, and I took a hiatus from real estate for a few years. And then 2010, jumped back in, focusing on rent to own deals. And I did like everybody. I self-financed my first couple of properties. And then, because I was doing tenant first, we found a really good tenant buyer, go buy them a house, rent own it to them for 2 or 3 years, then sell it to them at a higher price. That was the basic model. And then I ran out of cash. And I remember I had the perfect tenant buyers come into my office, and they were just great. And we looked at the houses, we found the perfect house for them, put an offer on it, got it under contract, and I calculated the whole thing, and I figured I was going to make about $40,000, nice little profit in a 2-year deal, if I got an investor on board for this property. So I needed, you guys are going to scoff because you're in Toronto, but at that time, it was about a $350,000 property. I needed about $85,000 for the down payment. And I heard, you know what? Just find the good deal and the money will find you. And I thought, well, I still have to do something. So I'd heard, all right, you know what? Pick up the phone and start dialing for dollars. Start cold calling people. So I tried that, called, rejected, called, rejected, called, rejected. I did that 5 or 6 times, couldn't handle a rejection. My fragile little ego couldn't handle it. So I quit doing that. Then I heard, hey, go out and start networking up a storm. So I did that, local BNI, Toastmasters group, Chamber of Commerce, handing out business cards, doing my 30-second commercial, doing the whole thing. Nothing happened. Crickets, all right? Got a bunch of weird looks. That's about it. Then I came up with what I thought was a brilliant idea, and I sent out a blast email to everybody I knew about this deal. I was kind of thrilled because I was starting to get some responses back until I started reading the responses, and basically it was stuff like, hey, Dave, I haven't heard from you in 5 years or 10 years or 15 years or whatever it was, and here you are looking for money for a deal. Screw off. All right? Didn't work. So bottom line is I lost that deal. Poof, the deal went up in smoke, had to return the deposit to my tenant buyers, tick them off, tick the seller off, tick the realtor off, ticked everybody off, got major egg on my face, and I watched that $40,000 profit go up in smoke. Why? Because I had run out of gas. And that's when I discovered what I call the big lie in real estate. The big lie is this: just find a good deal and the money will magically find you. Baloney. That's not how it works. What you need to do is you need to have investors lined up, ready to go in the wings, so that when you have that good deal, you've already got the cash for it. All right. Maybe it's not cash in the bank right now, but you've got people who are pre-interested in your deals. So just like Confucius said, just like Harvey McKay said, dig your well before you're thirsty. Raise the money first, then go find the deals. That's the writer downer, you guys. All right. So it's like our vehicle analogy. You wouldn't leave on a really long trip without filling up the car with gas. It just makes sense. So that's when I decided, you know what? I got to double down on this skill of raising capital. It just makes no sense to go ahead like this. So I spent a lot of time and effort and expense learning about this. And then I decided, you know what? Why don't I apply what I already understand about marketing to finding investors and raising capital? So that's when I came up with what I call my 5-step money partner formula, which I'm going to be taking you through this evening. And since that, doing that myself, raised millions and millions of dollars for my own deals. And more importantly, I've helped other people just like you raise mega millions for their deals as well. So as we go through this, you guys, I'm going to be sharing a few little case studies with you. I think I've got things set up so that you'll be able to hear these little short video snippets pretty well. First one is Rick Wheeler. When I first met Rick, he had one single family home in Edmonton, which was negative $200 or $250 a month cash flow. So not a great start to his real estate career. Luckily for Rick, he got educated about how to do real estate investing properly and how to find investors and raise capital. So Rick, you'll see in a second what he transformed his real estate business into. But I asked him a couple of years ago, what the impact of having investors in the wings ready to go has meant for him. So have a quick listen to this, you guys.
There was absolutely zero way I could put the deal together on my own. Didn't have the finances or couldn't qualify for another mortgage, whatever it is. So I would have had to pass on deals that were great opportunities if I hadn't had investors on board.
So that's why this is so important, you guys. There are going to be some really, really great opportunities coming down the pipeline because of COVID. I want you to be prepared and ready to go when those opportunities arise. All right. So starting from where he was, last time I talked to Rick, he then had 19 properties in his portfolio. He's focusing on suited single family homes. And each one of these properties was netting him $900 a month positive cash flow. All right. And that was in the doldrums of Alberta a few years ago. He's still rocking and rolling with this. 900 times 19. I'm not sure exactly what that is, but it's pretty darn good. All right. So really, you guys, it's up to you. You can self-finance. You can do deals once in a while, once in a blue moon. Every time you save up enough money for the down payment, that's kind of like having a little econo car. It's not going to get you to there very fast, that's for sure. Or when you learn how to attract investors, raise capital, it's like having your very own sports car. It's going to get you where you want to go so much faster, so much more effectively, and it's going to be a lot more fun as well. So myself, I went from doing creative deals, then I was doing the whole rent-to-own thing, and more recently, I've started focusing on multifamily properties. And just a few years ago, following the same process I'm sharing with you tonight, raised $800,000 with 5 investor partners and bought a 54-unit apartment building complex just outside of Ottawa, Ontario. So the 5-year projections on that deal, which came to fruition actually, cash flow over $355,000, mortgage pay down $485,000, appreciation at 4%, which was pretty conservative, over $1 million. Total profits on this deal to be shared with our investor partners, just over $1.8 million. So why I share this? Because when you've dialed it in and you've got investor partners ready to go, you can either do a higher volume of the kind of deals that you're already doing, or you can start doing bigger deals, whichever you prefer, all right? So that first time worked so well that we rinsed and repeated this process and very, very quickly raised $2.1 million from 13 investor partners for a brand new construction deal, all right? So it's all about attracting investors and raising capital using marketing to systematize things. And you guys, I'm going to give you the big 30,000 foot perspective here tonight. And then if you'd really love to dig in deep on this, then I'm going to invite you to attend a full 1-day virtual workshop on Saturday, June the 13th. And I'm going to give you a very, very special deal because you are part of the Volition group. All right. So you guys, let's take a look at the 5-step money partner formula. And if you don't have this dialed in, here's some of the problems you're probably facing. First of all, obviously not enough money to do as big of deals or as many deals as you want to do. You're not sure how to market, how to get the word out about what you're doing and how to do it properly. You're not sure who you should be approaching, and just as importantly, who not to approach, because you're probably aware there's this thing called the Ontario Securities Commission that you don't want to mess with, all right? And you're probably wondering, is now a good time to be talking with people about real estate investing? Is now a good time? I mean, the stock market took a kicking. We're not sure what's going to happen with the real estate market. Is now a good time to be talking to people about investing with me? And you're not sure how to approach people without coming across as needy or desperate or creepy. And if people do say, hey, I'm interested, then it'd be like, holy smokes, now what do I do, right? So you're not sure how to present your deals. And bottom line, we're all busy, so you don't want to spend a lot of time figuring this out, all right? So another quick case study here, Kathy Long. Love her story because she was a single mom working as a secretary, found herself on the wrong end of a divorce and the sole custody, sole support for her 3 teenage sons. So Kathy said enough is enough. She got educated about real estate, got educated about attracting investors, raising capital, and she got 21 units in her portfolio in under 2 years. Since then, she's grown it to well over 30 units. A lot of those properties are done with joint venture partners and raising capital. And she replaced her job income very quickly, became a full-time real estate entrepreneur, and now enjoys an amazing lifestyle and a multi-million-dollar net worth thanks to real estate and thanks to raising capital. All right, you guys, let's jump in. And again, just a reminder, if you came on a little bit late, I'm going to be giving you a copy of all of these slides. I'll tell you how to get those at the end of the presentation. But step number 1 of the 5-step process is figuring out who we're going to focus on. So step number 1 is let's gather together our list of prospects and let's reconnect with them. So gather, filter, and reconnect. Now, when it comes to who's going to come on board as our investor partners, we got a few choices. And the one that most people think of, first of all, is everybody and anybody who's got a pulse and a checkbook and it won't bounce. All right. That's what a lot of people think of. They'll say, hey, Dave, I'll take anybody who wants to invest with me. And I would suggest that's a bad idea for several reasons. So if you're trying to raise money from the general public, first of all, there's just logic, right? Whenever I'm working with clients, I always suggest, hey, your minimum investment should be $100,000. The minimum that you should be having people invest with you is $100,000, all right? In order for somebody to invest $100,000 with you, they need to know you, like you, and trust you. And when you're dealing with the general public, somebody who's a stranger, you don't have any of those. They don't know you, they don't like you, and they certainly don't trust you with their $100,000, all right? And the second thing to consider is the Ontario Securities Commission. Actually, Security Commission in any province in Canada. They're there to protect Joe Public from con artists. They're there to protect the public from getting ripped off, right? So the Securities Commission, caveat here, you guys, I'm not a lawyer, not an accountant, not a security specialist. I'm just sharing my understanding, all right? So the Securities Commission says, we are not allowed to raise money from Joe Public unless we're licensed. So for example, a stockbroker, a financial planner, I think mortgage brokers as well, they are allowed to raise money from Joe Public, and typically they work for much larger, big organizations like banks, financial companies, etc. All right, so they're allowed to. Or we can get an offering memorandum, which involves a lot of expense and a lot of red tape, and that's usually for much bigger deals. Otherwise, we're not supposed to raise capital from the general public. Now, there are a few exceptions. One exception is they say we are allowed to raise as much money as we want from accredited investors. And these, every province is a little bit different, but these are high net worth, high income individuals or couples, all right? So for example, if it's income, it could be $200,000 to $300,000 a year in income. 200 as an individual or 300 as a couple, net worth of 5 million or more, et cetera, et cetera. In other words, rich people. So if you know a bunch of them, great. The challenge is they're a little bit few and far between. The other challenge is everybody's after them. Everybody's going after them and their capital. So there's so much competition for their attention. Very, very difficult. But if you know some, great. That's a great place to start. So where does that leave the rest of us? Well, luckily, there is another exception. There is another group that we can focus on, and that is what the Securities Commission calls close friends, family, and business associates. All right, so I got a big, warm, fuzzy picture. That's how you should feel about these folks, right? So friends or family, coworkers, people who know you and who you know. People that, you know, if you bumped into them on the street, they know you, you know them, you could have a nice conversation, right? That should be your minimum criteria. So my goal for you is to come up with a list of 100 to 200 people as your prospective investors, people that fit that criteria. All right. And if I was doing this at a live event, some of you would be giving me some version of this look. You'd be saying something like, well, Dave, wait a second here. I don't feel comfortable mixing business and friendship or business and family. I've always heard, you know, neither a lender nor a borrower be. I've always heard, you know, don't do business with friends and family. I've heard all these kind of things. And what happens if the deal goes sideways? You know, that would be terrible. What would happen at Christmas dinner, et cetera, et cetera. All right. So that's one thing that gets in the way of a lot of people. And that can be a challenge if you don't set things up properly in the first place. However, if you treat it as a business relationship from day one and you do everything properly with the proper legal paperwork, it can be done. Definitely can be done. Another thing is, you know, people say, well, Dave, everybody I know is broke. All right. Nobody's got any money. Well, I'd suggest that's probably not true. My experience in life has been that quite often the people that are all flash don't have any cash. And quite often the people that do have cash are very humble, normal looking people. In fact, if you ever heard the book, The Millionaire Next Door, the vast majority of the wealthiest people in North America don't look wealthy, right? They're our neighbors. They live in houses just like we do. They drive regular vehicles. They're not sporting Rolexes and bling bling and all that kind of stuff. They're regular people who are very good with their money, all right? So chances are you do know some there. And some people say, well, Dave, you know what? A few years ago, I took a crack at something, network marketing or MLME, and I made a big splash and I got a few people signed up and nobody made their millions, including me, and it kind of fizzled out. So I think I've got some egg on my face. Well, welcome to humanity. Lots of us have that. Everybody loves a turnaround story. So I actually suggest use that as a springboard, use that as a way to educate people about the big benefits of real estate versus almost anything else out there. I mean, the success rate in real estate is infinitely higher than in network marketing. So you can use that as a compare and contrast. And here's the thing, you guys, I want to try and switch your perspective on things a little bit. And that is, I truly believe it's our patriotic duty to educate our friends and our family about real estate investing as an investment class. It's our duty to educate. I'm not saying to manipulate them. I'm not saying to pressure them. And I'm not saying to cajole them into doing stuff that they don't want to do. I'm saying educate them and allow them to make their own educated decision. And let me know if you agree with this or not, but I firmly believe that a good real estate deal is the best way for everyday people like you, like me, like our friends and our family to make an above average return on their money backed by a solid, tangible, controllable asset and that's real property. We're talking about, shelter. Everybody needs a roof over their head, right? Compare that to stocks, bonds, mutual funds. It beats everything else hands down. All right. So it's a matter of let's educate people about that and allow them to make an educated decision. Because quite frankly, we've seen this. For the average Canadian, their investment choices are pitiful. They're making no money on their money. They're losing money on their money. I mean, mutual funds, my God, whether you make money or not, you're going to get whacked with management expenses, right? That's right off the top. So nothing else out there comes close. We've seen this definitely with the recent happenings with the stock market. I mean, it went down like 30% in a day or two. It's crazy. All right. Now, the other thing is, let's change our perspective, because when we get into this, it's all about me, 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 me. I want to grow my portfolio to this. I want to create this kind of cash flow. I want to create this kind of net worth. I want to be able to do this. Well, also, I mean, when you bring investors on board with a good deal, you're helping them as well. I want to illustrate this with one of my most successful students, John Simcoe. John has raised over $30 million for his deals over the years. And a couple of years ago, I did a quick little interview with him and asked him to share what one of his most inspirational experiences has been with his investor partners. So listen to A, who John likes to have invest with him, and B, what he's been able to do for one of his partners.
It was a big light bulb aha moment when I learned that I could partner with other people. So that idea was totally new to me before I had met you, Dave. And now it's something that I do very regularly. I actually prefer working with friends and family because I like working hard knowing that they're making a good return, and I like being able to help out my sphere a little more directly like that. So I really like growing my friends' money and helping them do something that they can't on their own. I get very happy investors, Dave. I've got one client in particular where I'll be sending them enough money every month that they can actually be retired off the passive income that they get. And so that just makes me feel really good, because that's one of the things that I got into this to do, was so that I could do that for myself. Now I have the power to be able to do that for other people.
I love that example, you guys. So, I mean, think about it. I mean, John's been able to help one of his investor clients retire thanks to the cash flow they're getting from his deals. Well, that might be a bit of a stretch, but I mean, imagine if you could help one of your investors, let's say, put a kid through university. Would that be pretty awesome? Or if you could help one of your investors maybe, take an extra vacation every year that they couldn't otherwise, or do some repairs on their home, or perhaps even retire a few years earlier, or a little bit more comfortably than they could on their own. How would that make you feel, right? Especially if it was a friend or a family member. So when you do win-win deals, you get very, very happy investors. This is Rena, one of the investors on that apartment building deal I was telling you about, getting her first cash flow check. I mean, how happy is that? It's all about creating win-win scenarios with your investor partners. And you guys, now is the perfect time to connect with people and reconnect with people. This is the first time in modern history where everybody's kind of been locked down, where we can get people's attention much easier than we could before. All right. So if you want to write something down, write down 200. That's the target. That's how many people we'd like to get on our prospective investor list. And people always say, well, Dave, how do you come up with 200 people? Well, basically find all your contacts wherever they might be and export them, get them all into one place like an Excel spreadsheet, and then start from there. And when I do this at a live event, I usually get people to just take a look at their cell phone. Go ahead and open up your cell phone and take a look in your contacts. Scroll down to the very bottom. I know how this works on an iPhone. I'm not sure on an Android, but on an iPhone, you can just touch the number key at the bottom right below the Z, and that will show you how many people you've got in your contact list altogether. So chances are, if you report everybody from all your different sources, from your social media, from your phone, from your email addresses, etc., get them all into a spreadsheet, chances are you're going to have well over 1,000 people. And then it's a matter of sorting it down and filtering it down to 200. And that is so much easier than trying to come up with 200 people off the top of your head. All right. Now, whatever you do, you guys, before you start talking business, don't make that mistake I did. Remember, I told you that I was desperate for that deal and I spammed everybody with a deal offering. Don't do that. Before you start talking business, make sure you break the ice first. Connect with people on a personal level first before you start talking business. All right, so that's step number one, gather, filter, reconnect with people. Step two of the 5-step process is let's get our investor presentation put together so we can present with poise and power. Now, what I'm going to suggest you guys is that you use a well-organized, well put together, well-structured slideshow presentation. So kind of like what I'm going through this here today with you, you would do your own version, but as an investor presentation with people that you're talking about your deals, all right? A slideshow presentation is very, very effective. It allows you to keep on track. It's much more interesting to the other person as well. And you can use it online or in person. These days, we have to use it online. It works perfectly via Zoom, all right? Now, quick tip for you here, a COVID tip. Don't try to whitewash the whole current COVID situation. Hit it straight, hit it up front, overcome people's objections about why they shouldn't invest now because of COVID. Make sure that you hit up their concerns right up front. Now, a very well put together PowerPoint presentation, slideshow presentation can be super effective. So Brendan, for example, he was a fairly new investor. He had a couple of deals under his belt, ran out of cash. And his very first presentation using a slideshow presentation, he not only got the lady he was talking to on board, but she told 2 of her friends. He actually got 3 investors on board from his very first presentation. Was that beginner's luck? Probably, but a very good presentation can do wonders. And nowadays, especially if you're using them online for one-on-one presentations or webinars, they are super, super effective. All right, so that's step number 2. Be able to present your opportunities in the best possible light and use a slideshow presentation. Step number 3 is all about the marketing, or what I call constant and consistent communication. It's how do you get the word out about what you're doing. So you want to make sure that you're not seen as just a flash in the pan. You want to make sure that you're constantly top of mind with your prospective investors. So there's all sorts of ways to do this online and offline. A couple of my favorite online strategies are electronic newsletters or e-zines, as well as short little video snippets, or what are called video logs, all right? Now, your goal should be, if you want to write something down, your goal should be that you should be touching your contacts, your database of prospective investors, at very least once a month, and ideally 2 to 4 times a month. It's not too much, that's just fine, but give them good, solid information. Don't overeducate people. Keep it kind of light, keep it fun. Make sure they understand that you know what you're talking about when it comes to real estate investing, and always have a call to action. Hey, if you'd like to find out more, give me a call. If you'd like to find out more, click on the Contact Me tab on my website. If you'd like to find out more, send me a text message, whatever it is, right? Bottom line is, stay top of mind, do constant, consistent communication, marketing, and that way you'll get them calling you, and you won't have to be cold calling anybody. And you guys, right now, perfect time, especially if you're off work or you've got less work than before. Now is the time to double down on your marketing efforts. All right. It's all about getting them to put up their hand and say, yes, I'm interested. So then you can focus on them and you can tell them more. All right. So that's step number 3. Step number 4 is to be seen as a credible expert and authority. I mean, it just makes sense, right? They need to know you, like you, and trust you in order to invest $100,000 or more with you. They need to see you as a real estate expert. Good news is, you guys, over 95% of Canadians have never purchased a revenue property. Their own home doesn't count. I'm talking about a revenue property. So if you've got even one deal under your belt, you're already ahead of 95% of the general civilian population, all right? So that's huge. So it's not hard when you know how to be seen as a credible expert authority. A few tips here for you. Again, take that leadership role within your sphere of influence. Next thing is dress professionally. Yes, even if you're at home, even if you're doing a Zoom meeting, dress up if you're talking to a prospective investor about investing with you. Speak knowledgeably about your market and your strategy. Very, very important. Have good looking materials. And nowadays, you guys, you need to have a website specifically for communicating with your investors. And again, websites, make sure you've got videos, lots and lots of videos on your website. Real estate websites with videos get 400% more interaction than the same information not via video. All right. Video is the next best thing to them seeing you face to face. Make sure that you've got the professional website When you can, get some professional headshots done, a little bit difficult these days, and don't go cheap on your marketing materials. So spend a few bucks, get some really good business cards done up at the very least. All right. Another quick case study. Love this one. Actually, a friend of mine here in Kamloops, Sam Perrin. And Sam was a cop. He was one of these guys. Ever since he was a kid, he always wanted to be a police officer. He became an RCMP officer as a young man and loved it for a while, but then quickly realized it's not as much fun as it looks like on TV. And he and his wife, bless their hearts, adopted 3 little kids, all from the same family. They're all under 4 years old. One fell swoop, instant family, all little kids. And he said, I love this stuff. I want to spend more time with my family. And I don't want to be a cop anymore. He wasn't enjoying the job. But it was pretty difficult to leave that job. Good thing is he'd already started investing in real estate. He had a few properties in portfolio. He got serious about real estate investing. He got serious about raising capital. And in a very short period of time, less than a year, he grew his portfolio to 18 doors using other people's money, using joint venture partners, and was able to quit the force. Now, he didn't completely replace his income right in one fell swoop that quickly, but he was making enough from real estate to be able to walk away from the job and the pension. Now that's cool, but what's even cooler is that his mind has expanded so much. So that was what he needed to quit. Since then, now he started focusing on bigger deals and even development deals. And he and his partner, they are on track to adding 100 doors to their portfolio every single year for the next 5 years. Then they're going to call it quits. All right. So that's what happens. You start and then you expand, your context expands, your goals expand as well. All right. Step number 5 of the 5-step process, you guys, I know I'm going quickly, but you're going to get all these slides as well, is start the snowball effect. Once you've got a couple of investors on board, it's so much easier to get more of them because birds of a feather flock together. So you can get good testimonials, ideally video testimonials, and you can also get referrals to other investors from your current investors. So that is step number 5. And again, it's all about starting that snowball effect. All right, you guys, we've gone over a lot of stuff. Let's go over a quick review and see how this can work for you. So again, real estate is the vehicle we've chosen to create our ideal income, our ideal net worth, and bottom line, our ideal lifestyle. And the good news is we can help ourselves do that. We can also help our investor partners do that. And money is the fuel that makes that vehicle go. Having investor partners on board, that's like having your very own sports car. It's going to get you where you want to go so much faster, and it's going to be a lot more fun as well. Another quick example, Todd. Todd was like a lot of us. He got off to a good start with real estate. He got 3 properties under his belt in his early 20s. Then he got married, started a family, started a business, put the real estate on the sidelines for about 10 years. And then he got back into it. He went to an event, got re-inspired about real estate, got educated about attracting investors, raising capital, and he added 18 more units to his portfolio in under 6 months using other people's money. Last time I talked, he was at over 70 doors in his portfolio, focusing on real estate full time. So it's really up to you. You can stay small and go slow trying to self-finance everything, or you can get where you want to go so much faster using other people's money. And bottom line, you guys, there are billions and billions and billions of dollars out there looking for a good home. Just like Robert Kiyosaki, Rich Dad Poor Dad, says, he or she who raises the most money wins. So you guys, we've gone over this 30,000 foot perspective very, very quickly. I'm going to open up for Q&A in a few minutes. But first of all, let me tell you a little bit about the workshop that's coming up, because what you've learned, knowledge without taking action, is worse than not knowing in the first place. And going along with our vehicle analogy, maybe you remember way back to when you were first learning how to drive. Chances are your mom and dad did not throw you the keys to the car and say, go for it, figure it out on your own. They did not throw you the keys to the car and a DVD that explained how to drive to you and say, go for it. No, chances are either they or somebody else got in the car with you side by side and went through the whole process, showed you how step by step to do it. Well, I want to be your driving instructor when it comes to attracting investors and raising capital. And that's why I'm doing a special full one-day workshop all about this on Saturday, June the 13th. It's my investor attraction virtual workshop. This is the ultimate shortcut to get from where you are to where you want to be in your real estate investing career by working with other people and their money. So now, you guys, it really is the perfect time to do this. Now's the time. Turn off the Netflix, turn off the Facebook, focus on what you need to know and the skills that you need to develop in order to take advantage of all of the opportunities that are going to be on the other side of this COVID crisis. So when you come to the workshop, here's what you're going to get. First thing is, you're going to get a full day of training. This is at least a 7-hour training. It is not candy coating. It's not high level. This is digging into the weeds. So first, we got 5 different sessions on this time frame. First session is all about targeting, who to focus on, how to get them, how to collect that information, how to create your database. That's what that whole session is about. Session number 2 is all about connecting. So again, I told you my sad story about spamming everybody and getting a bunch of hate mail. We don't want that to happen for you. So I'm going to show you exactly step by step how to break the ice with people before you start talking about real estate investing, how to make a personal connection with them first before you start talking business. I'm going to show you how step by step and give you the tools that you need for that. Session number 3 is all about how to create what I call your $1 million investor presentation. Not only that, but how to use that one-on-one and present virtually as well. So at the end of the virtual workshop, you're going to know exactly what you need to have and in what order to have your very own $1 million investor presentation. Plus, we're going to give you the opportunity to do a little bit of practice right there and then as well. You're going to see how to do these virtually and in person. Again, these days, we're going to have to be doing them via Zoom, so I'm going to show you exactly how to do that. Session number 4 is all about the marketing, the constant, consistent communication. And I'm going to be giving you tips and tricks and showing you in depth my number 1 marketing strategy for getting people to put up their hand, reach out to you, and ask for more information. And then last but not least, session number 5 is all about leveraging things. And as real estate investors, we love that word leverage. I'm going to show you how to leverage all of your efforts to get the biggest bang for your buck. And that is through webinars, online group presentations. So I'll give you an example of how effective this is. Well, first of all of the capital I have raised for my own deals since 2013, all of that, millions and millions of dollars, have all been done via webinars. This works really, really well, you guys. So this is kind of the icing on the cake. So an example here, Marco Nava, when he reached out to me, he was transitioning from single family homes into multifamily properties. He had this 14-unit apartment building under contract in Edmonton, 3 commercial units on the bottom floor for $1.7 million. Said, Dave, it's great. I've got it tied up. I've got the financing organized and everything. I just don't have the down payment. So what we did is we put together his $1 million investor presentation and did a webinar presentation. And bottom line, within a week, he was able to raise the capital he needed to buy that deal. So imagine that. He went from single family homes to adding on 17 units in one fell swoop. What did that do for his net worth? What did that do for his cash flow? It was absolutely amazing. But what's even better is that 6 months later, he found a bigger, better deal downtown in Edmonton, rinsed and repeated the webinar strategy, raised over $1 million for that second deal, and bought that property. Now that's cool. But what's really cool is that's the one that got him out of the rat race. That's the big deal. If you know the cash flow game, that's the big deal that got him out of the rat race. He was able to quit his nice, secure government job and become a full-time real estate investor. All right. Here's what Mark had to say about the whole process. And it started with him coming out to one of these workshops.
Wow. I mean, the first time we got together was when I had this big deal that I didn't know how to raise capital for, and you helped me. You were really instrumental in helping me see that through.
How much money did you raise from the webinar that we did? Do you recall?
We were able to raise $440,000, which is what we needed to close on that deal. It's mind-blowing. Mind-blowing.
All right, you guys. I've been doing webinars for so long that they weren't even called webinars when I started. They were called teleseminars. We did them over the phone. All right, so I've been doing webinars for a long, long time. I probably do on average 3 or 4 online group presentations every single week. So I've got it pretty much dialed in. And I'm going to show you how step by step. I'm going to give you a webinar tutorial. So again, I'm going to show you how, and that's all part of this one-day workshop. So as you can see, this is a full day of hands-on practical training. It's not light, it's not multi-speaker, it's not a pitch fest. It is a full day of hands-on training. The other thing you get as part of this is you get a workbook with all of the slides from every single one of those sessions. So you've got something to refer back to after the event so that you can implement what you've learned, okay? So you're probably thinking, well, sounds good, Dave, but what's it going to set me back? What's the price tag on this? And you guys, if you've ever been to, like Rich Dad Education or even Keyspire, any of the big guys that come swooping through the area, chances are they give you a little intro thing, and then they sell you into a weekend event. And they charge anywhere between $500 and $2,000 for that kind of a weekend event. This is a full day workshop, you guys. I firmly believe this is over a $2,000 value, but you're not going to pay that. The regular investment for this is $97, all right? But we're doing this virtually. So I want to give you a special opportunity here. And because you're part of the whole Volition group and you're good friends with Ming and Ed and Sam and Matthew and everybody, your investment for this full day training is just $49. And you guys, if you want to grab a ticket, I suggest you do so sooner rather than later because they're pretty limited. So I'm going to put this in the chat box. I'm going to put that, let's see if I can give this to everybody in the chat. So there should be a link in the chat box. You guys can click on that link and go directly to the site and grab a seat. And I always want to do this, but wait, there's more. I don't sound as good as the TV guy. All right, wait, there's more. So to make this an absolute no-brainer for you, I am going to give you a bunch of amazing action taker bonuses. And the first one is a whole system I put together for attracting motivated sellers. So if you recall, back in the day when I first got into real estate, I did 18 deals in 18 months, all by attracting motivated sellers and working directly with people who've said, hey, come take a look at the house and make an offer. So what I want to do is with this workshop, I want to create a good problem for you. And the good problem I want to create for you is that you'll have more capital than deals. So then this system solves that problem. This will help you to find the deals, more deals now. So this is a digital program. I've sold it for as much as $1,000 in the past. It is a free bonus for you coming out to the workshop on June the 13th, you guys. All right. The next part is insider secrets for raising millions. Put this together a few years ago with some very, very bright Canadian real estate entrepreneurs, people like Russell Westcott, #2 guy at Rain for many, many years, co-author of Real Estate Joint Ventures, July Ono, who went from 0 to 500 doors in less than a decade, all using investor partners. Paul Blackyer, Canada's leading expert on using other people's RRSPs to buy your deal. So a different kind of investor. All of us got together, Insider Secrets, another $999 value, free to you as a bonus here. And then last but not least, I'm going to take you through this whole training process in the one-day workshop, but everybody's situation is a little bit different. You know, your particular market that you're investing in, your strategy that you're investing in, how you want to structure your deals with your investors, etc. So what I do is we have a one-on-one consultation afterwards to show you how to apply what you've learned to your specific situation. That's a $500 value. Again, a free bonus when you come out on June the 13th. So quick recap, you get the one-day, full-day workshop, the workbook, more deals now, insider secrets, clarity strategy session, total value over $3,500. Again, you guys, when you go to investortractionworkshop.com/volition, your investment today is just $49. Now, I used to do these live and in person, you guys, but obviously with COVID, that isn't possible anymore. I did my first one not that long ago, and here's what some of the folks had to say. I thought it was only going to be 5 hours. It turned out to be 7.5 hours. So Adele said the 5-hour webinar with Dave ran on for almost 8 hours. The fact that everybody stayed on such a lovely Saturday speaks volumes for his content and teaching capabilities. All right. Spent a beautiful Saturday with Dave Dubeau. It was 8 hours very well spent. He knows his stuff and is fantastic at sharing his knowledge in an easy to understand manner. So again, you guys, to welcome you out to this workshop, we keep them small. So just like when I'm doing a regular workshop, I like to keep it small and intimate, like to have breakout sessions, like to make this as similar as possible to an actual live event. So we're going to have breakout rooms. We're going to have a chance to mix and mingle and meet with some of the other people on the workshop. You're going to get a lot of hand-holding and one-on-one support through this whole thing. So we keep it small. We keep it intimate, maximum 55 people. We actually have overflow from the last one that we did. So 5 or 6 of those spots have already been taken. So we got space for 49 people for our June 13th event. So if you'd like one of those tickets, please go ahead now and grab it. Now, if you're skeptical If you're a skeptic, kind of like I am, you're probably going, Dave, all right, 1-day workshop, $50. You're giving us all these bonuses. Supposedly it's so amazing and such great content. Why are you doing this so cheap? Why is it so cheap? How can it be good if it's so cheap? All right, good question. And the reason is, well, first of all, why am I doing this? First of all, yes, I do enjoy doing these kind of presentations. I love seeing the light bulb moment go off in people's eyes. And I'm going to teach you everything I can in those 7 hours. And it's going to be a roadmap for you to start raising capital within 6 weeks or less. So right in the midst of this COVID, how to do it properly so you can start raising capital faster rather than later. All right, so I love teaching it, but there's a financial reason I'm doing it as well. So I'm just going to peel back the curtains and to share with you exactly why I'm doing this, you guys. So what I do is I have a small boutique marketing agency, and we work specifically with real estate investors just like yourself, and we help set up all of the marketing to attract investors and raise capital. So what I'm going to do on the workshop is I'm going to teach you everything to do to follow my 5-step process. And then I've got 2 different offers for you. 2 different offers that I'm going to make you on the workshop. All right. These are tools and resources that will make things so much easier for you. Right. So I'm going to show you what to do and then give you the tools that you need, if you want them, to actually make it go so much smoother and easier. All right. If you want it, great. I'm going to make you what I hope is an irresistible offer. But if you're more of a do-it-yourself kind of person, that's okay too. You're going to get massive value from the workshop. All right. How's that for transparency? I'm telling you exactly why I'm doing it. All right. So this is a way for us to get clients on board for our boutique marketing agency. All right, you guys. So again, if you'd like to join me for that, go click on the link or go to investortractionworkshop.com/volition. And if you're still on the fence, if you're concerned at all about your $50, don't be, because I've got a money back guarantee. And here's how that works. Sign up today, reserve your spot on the class for June the 13th. Come and spend the day with me. And if you're not happy, if you're not thrilled for any reason, if you don't think you're getting at least 10 times your investment in value from the program, let me know and I'll give you all of your money back. All right, just let me know and you'll get all of your money back. Here's the caveat. If you want the refund, you're not going to get the bonuses though. Fair enough? But if you're not happy for any reason, just let me know and you'll get your money back right away. Ming, we're going to open up in just a few minutes for Q&A. If you want to start getting people typing their questions in the question box or putting up their hand or what have you. But you guys, if you want to start getting the kind of results that we've seen. So John Simcoe, over $32 million. He's been to 3 of these things, for crying out loud. If there's anybody who doesn't really need to come back, it's him. But the one he came back to last fall, he wrote me this messy little note. Dave, thank you for helping me attract the money to do my real estate deals. All right. Brian Dagenet, Ottawa, Ontario, came out to this event, learned everything he needed to go out and raise enough capital to buy a sixplex downtown Ottawa. Paul Reynolds, John Wiles, already had tons of experience raising capital, but they were doing it the old-fashioned ways, chasing after the investors. They applied the model, had investors approaching them, quickly raised $1.5 million. Bruno Jury, his very first presentation using the $1 million investor format, raised $200,000. Craig Lingard went from chasing the money to having more money than deals. Karen and Leona McKnight, $80,000 raised their very first presentation. Aaron Bellamore using the webinar presentation, $673,000 for 2 multifamily properties. We already talked about Marco Nava. One of my favorite stories, Jamie and Leslie Collard. When they first, they're based out GTA actually, a little place called Burford, I think. Burford, I believe. When I first started working with these guys, they came out to one of the workshops. They had 2 properties, 3 doors total that they had self-financed. They ran out of cash, hit the wall. They quickly went through the process, quickly raised their first $120,000, and then the rest is history. They went from 3 doors to that last count, last time I heard from them, 72 doors, all using other people's money. All right, you guys. So if you want to take advantage of all the opportunities that are going to be coming down the pipeline, it's your turn. All right. I want to invite you to come out to this upcoming workshop, Saturday, June the 13th, with the special pricing there, just $49. And again, as we're going to get set up, ready for Q&A, you guys have a little listen to some other folks just like you, what they had to say about this kind of training.
Dave has already over-delivered, you know, it's just so much fun, just a easy-going atmosphere, and it's more than I ever expected.
Learned a lot, and I'm ready to go out and make some deals.
I like the information, it's very actionable.
vehicle and come. Yeah, fantastic. I think you need to be here. You need to experience it for sure. If you want to do this as a business.
Would you recommend Dave's future training event?
Oh, hands down, hands down. Dave's been a mentor of mine for a really long time, and I have everything to a credit to him for my real estate investing.
Can get focused now and take action. My wheels are spinning so fast, I think they're going to come off the rails.
Dave's showing me the right way to do it. You got to get off the fence. You got to come here. You got to learn from Dave.
Go for it. Can't go wrong. The program is awesome, and just do what it says in the program, take action, and you're on your way.
I think it's a very valuable investment. Anything that Dave offers, we've always found it to be top-notch.
You know, Dave Dubeau puts on a program, and he always delivers more than what you would expect, and it's no different this time. And he's put on a fantastic weekend here for all of us, and we've all learned some valuable stuff that's going to make us somebody.
All right, you guys, what I'm going to try and do here is share the screen with you. Ming, let me know if you're able to see the website there. I'm not sure.
Yeah, we can see it, no problem.
Okay, so you guys, when you click on the link, this is where it's going to take you. You're going to see Ming's smiling face and my home right there, and this gives you all the information about the workshop. You can click some of the testimonials and whatnot. Kind of interesting, that batch of people that you just saw the testimonials for, that's from a couple of years ago. They all had to pay over $1,000 and fly to Kamloops to attend that event. All right, so we're going to be doing this virtually. It's an online version. So click through that, check it out. Click on the big blue button. That'll take you to our secure online order form. Again, you'll see Ming's handsome face there. Fill out the information, fill out your contact information, and put in Visa or MasterCard. Click on the order button, and that will get you your spot, and you'll get a secure confirmation about all of that, and we will have you on the workshop on June the 13th. Perfect.
Great. Awesome. Thank you so much, Dave. I just wanted to add in, it's funny that I know a couple of the people that you showed doing testimonials, in particular, Mark Onaba. I actually met him when we were at I think it was an Acre or one of those large real estate events. Yep. And you're kind of talking about the professionalism, making sure you've got a good business card, dress sharply, and he hit all those. He must have had, I didn't know he was a student of yours actually, and he sticks out to me, one, because he was extremely well spoken and probably already successful at the time, but his business card is one I still keep to this day, and I probably met him about 2 years ago, maybe a year and a half ago, because it's the most impressive business card I've ever seen. It's like I thought he was giving me like a strip of metal, and it really stuck with me. And I do remember Mark for that.
Was it something like this?
Yeah, it was very impressive. Yeah,
these are cool cards. Yeah, they're solid plastic with gold foil inlay. Yeah. So yeah, they're like $3 each.
But yeah, so these aren't just random people. I think that that are Dave is throwing up here. These are actual people who I'm familiar with. Surprised to learn tonight that they were students of yours. Actually, I didn't know that. And usually when we do these, I'm sure you've those who are regulars on our seminars. We don't sell stuff usually, but I talked to Dave, and we wanted to make sure that we were able to provide this education to you guys. And $49, to be quite frank, is really cheap. If you came to our February 1st event, we charged much more than what Dave is charging. So it's good information. If you do your own research, like we always say, go verify it yourself. If you are looking at people to get education from when it comes to raising capital, there'll be two names that come up. And I hope you don't mind this, Dave, but there's two people. There's Russell Westcott, and there's Dave Dubeau. Both of them are West Coast boys. And, if you're going to learn from anybody, learn from the people who are really experienced in this. So.
Oh, and Russell's awesome. And Russell, actually, it's interesting because it's not, we're very, how can you put it, complementary. Yeah. Because Russell's real strength is on how to structure joint ventures, how to which paperwork to have and how to structure the joint ventures with your investor partners. My side of things is all about how to market to get the investor partners. So because that's my strong point, right? Is marketing. So it's how to turn things around instead of chasing after people, how to get people, in a certain sense, chasing after you. That might be a bit of exaggeration, but reaching out to you, interested in your deals instead of you having to run after them all the time.
Yeah, that's great. The one thing I want to pull out of your presentation as well is something that really stuck with me was you said big deals, right? Using other people's money to help you make big deals. And if you're an investor in the Toronto market, every deal is a big deal, right? We talk about properties here in like the 1, 2, 1, 3 starting with renovation costs, if you're doing a luxury triplex conversion where we're looking between 400, 500, 600,000 in renovation. So to be able to execute on one of these luxury triplexes, you're often looking at 800,000 to get this deal going. And we've run through the numbers. You can make tons of money doing this, but obviously putting that much cash forward to do this is very difficult, which is, for those who are interested in getting other people's money to do this for you, I think this is very, very pertinent. So I think we just have, there's 2 questions that we have on the chat. Are you able to see the chat, Dave?
I am, but if you want to read them out or
Sure, I can do that. So first question is, by using other people's money, do you ever reach a financing wall, or does this model obtain financing, not just for the down payment, but also for the mortgage?
Okay, no, the model I'm going to be sharing with you guys on June the 13th is primarily about raising the capital you need for down payment and renovation costs. Typically, people are focusing on getting bank financing, using that leverage and that cheap money for the majority of the financing. There are certain circumstances where perhaps you want to go in all cash if you're going to be doing a flip or something like that. It works for that as well. But what you can do, what the model does teach you, is how to bring investors on board, perhaps not just with the capital, but if you need help with qualifying for the financing as well, they can bring that to the table too. So it doesn't have to be just capital. It can also be their credit.
Great. And actually, the second one wasn't a comment. It was just a comment. It wasn't a question. So are there any other questions from anybody else on the line? Okay. Well, Dave's contact information is up on the screen. If you want to reach out to Dave, I'm sure, Dave, I'm going to offer you up here, but I'm sure you can reach out to the email here and, contact with Dave that way. Is there anything else that you want to mention before we wrap up then?
No, but what I'll do, Ming, is I will send you the link where everybody can download the bonuses. I'm sure you guys have got some sort of record of who was on this live. And I'll send you the information so that you can send that out to the people who are on here live so they can get all the bonuses I promised them for watching the presentation live.
Awesome.
I see we've got some people signing up on board already. So what do we got here? We got quite a number coming in. So congratulations, you guys. So a little shout out to, sorry, I got too many screens open here. Vilma and Justin and Yvonne, and they're kind of coming in pretty quickly here. So again, welcome to everybody. Look forward to seeing you on June the 13th. That's for sure.
So I'm just going to wrap up on our side then, just to end for the evening. So, now what? Obviously, there's Dave's session that we talked about. We also have our advisory. It's completely different. It has nothing to do with joint ventures or raising capital. But if you're looking for help in your real estate investment journey, we have a free 60-minute session, as I mentioned in the beginning, where we help guide your investment plans. Raising capital, joint ventures, things like this may definitely become part of that. And that's something we would want to discuss with you guys. So hit us up, info@volitionprop.com to schedule a session. Our next meetup, that says July. It should not say July, it should say June. So June 17th, we'll be talking about Airbnb and short-term rentals. We haven't quite secured it yet, but our guest should be. somebody to talk about what's happening with short-term rentals, especially with what's happening with COVID, and what is that going to do in terms of an impact. Our guest speaker has a very interesting point, a very interesting viewpoint as to the future of not just short-term rentals, but rentals in general, and how he believes that entire space will be changing. And I think this is going to be a very interesting meetup for folks to attend and get kind of a glimpse into what future rentals are going to be like. And lastly, we always end with this. If you can do it, who can do it? You can do it. Thank you very much, everybody, for joining tonight. Take care.